What is going on, guys? Let me go widescreen here. We're going to talk about Tesla today. We're actually going to pick up the Cybertruck from the service center right now. I have a loaner Model 3 at the moment. Got my big dog Blue here. This big dog can only lay on my lap because I have FSD. He thinks he's a big baby. He is a big baby. He's massive, but he's 1 year old. New addition to our family. I actually had him a couple days. But yeah, I was thinking about Tesla, Robotaxi, Lyft, Uber, and how those play with each other. And I just started doing something investment wise that I'm kind of against, but I really have some deep conviction on it. And I also wanted to cover why Elon, the CEO of Tesla, is not why the CEO of Tesla, sorry, for past state trooper or whatever, will not publicly say something about this, and will even probably downplay it. And here's the thing: it's the relation of Uber and Lyft to Tesla. And the disruption that Robotaxi is going to cause to Uber and Lyft. And that also brings me into the thing that I don't really do, but that I'm starting to do. And that is to essentially short Uber and Lyft as a long-term play, not a short-term play, not like this next month, not even really kind of this next year. 2 years out, 3 years out is when I really see the major detriment there. And I'm not actually doing shorts because shorts are just very dangerous. I'm actually doing puts, and I'm doing like extremely out of the money puts. And for those who don't know what puts are, they're basically like a short, but they basically have downside protection. The downside protection is that you lose all your money versus losing all your money and some, where you can literally owe in money on a short, and you got to cover your short positions with other cash in your account, and brokerages will sometimes even force you to sell, kind of similar how you see with like margin and stuff like that. First of all, the reason why I don't do this is I don't like betting against companies. I don't like to ever see people fail. I want to see everybody be successful, right? Any Uber investors, Lyft investors, the company of Uber and Lyft, the employees of Lyft and Uber. I want all these people to do well. I want them to prosper in life. So, and I feel like this way about any company, unless it's just like, even the shittest companies in the world, I don't feel this way because they still have good people working for them. They still have good investors investing into their company, even if the company itself is not necessarily a good company. I just don't wish anything bad on people. And I look at shorting and I look at placing put positions as doing bad against somebody, right? I kind of have moral disbelief in it. However, why am I going ahead with this, right? It's because I have such a conviction of what's about to happen in the future that for me not to monetize off of what I think is about to occur will essentially could be one of the biggest misses in my investment career. And when I say that, I mean this could be one of those opportunities where you could have a 100x return, a 10x return, 50x return, some wild returns. And there's also different levels to it, right? So whenever it comes to like Lyft, the Lyft options that I'm buying basically like 3 different Lyft options. And I'm not gonna really state the exact options that I'm buying right now because I'm actually just testing around, just getting started with it. But I kind of want to give everybody the insight of it. Same with Uber, doing the exact same thing with Uber. I'm playing around and exploring the different options that are available on the market. Look how big this baby is. I'm playing around with these different options available on the market because there's so many things that do go into options, and they are confusing, and there's just a lot of different things, right? You could have like literally one option that's like literally $1 away or 50 cents away from another option, and it performed way worse than another option. Generally, options that are close to each other kind of perform similarly to one another, but it also depends on the stock and its options associated with that stock. It completely depends on the stock. Like Lyft and Uber stocks might how do I put it? They might react differently. They'll definitely react differently. It's not really the word that I'm looking for. And I'll give another example. Like there's some options that I trade that are 2x what the stock trades at, right? For like maybe AMD, I think AMD trades about a 2x of what the stock trades at. So if the stock goes up 2%, the options that I'm trading in go up 4%. But now for my like Tesla options, damn, that was nice. This semi just came up into my lane, and the car just whipped over pretty nice. I'm on V12 software, so I'm still pretty impressed that this is V12 software and not V13, which makes a big difference if you have a Tesla and whatnot. Oh, but Tesla options are trading at a 4x. So if Tesla goes up 4%, my options go up 8%. So it's significantly different in the amount of gains that you see and the amount of volatility you see in the different prices. So I don't want to get too deep in the options, but I want to explain like why I have some different options, right? One option that I have is far out, 2-3 years out. I think 2028, maybe it's 2027. Again, I'm just playing around with these. So I even have, when I said 3, I might have like 5 or 6 different options in each one of these. But it's just like just putting a dollar amount there so I can track more closely the different options that I'm trading into. So like between Uber and Lyft, I probably have a total of like 10 options. But I have categories that I'm going after. One is long-term, 2-3 years out, lose all the money or make 50x. That's what I want. Lose all the money or 50x. That's their objective. Okay. Then I have like more of that midterm option that is also lose all the money. All these options are pretty much lose all the money. Anytime I'm doing a put, I just look at it. If it's not a hedge, it's a lose all the money option. I don't care about the money that I put in it. So it'll be like less than probably 5% of my entire portfolio will be in these options. But, so, and I'll get into a little bit about how they could explode in value. And the ones that are way out are like way out of the money, right? Even getting notifications that like people are not buying these options. Are you sure you want to buy them? Yes. And I'll get into that in a second. Then I have like mid-level options that are like, 1 to 2 years out, in that rough time frame. And then I have options that are like 6 months out. Now, the 6 months out, I'm putting lesser amounts of money in the ones that are closer. And it also depends on what's happening on a daily basis. So like we just had some big jumps for Uber and Lyft. I think both of them have been up like roughly like 20% in like the past few weeks or something. And I believe one of them just hit an all-time high. So that to me was an indicator that, well, anytime a stock moves in huge amounts of percentages, that's where I'm ready to put a hedge there, or it's a good time to put a put there, in my opinion, because a lot of times there's pullbacks. You can have huge spikes. Same with Tesla. Tesla's been on the run for a month, or for like the past like week or two, and I'm even cashing out some of my Tesla shares, and that's part of the reason why I'm doing this. I'm cashing out some of my Tesla shares. I'm taking a little bit of that profit and putting it into the Uber and Lyft puts, because one, they're a cheaper and riskier bet for what's going to happen with Robotaxi. However, the upside can be way more extreme than even my Tesla options can give me, especially like the ones that I'm buying and saying like nobody's buying these options. If those come back active again and people start buying those options, it is highly plausible that those can 100x overnight, but again, it's highly plausible that they're going to turn into zero and be worth nothing. And then I have like those the shorter term 6 months ones, and for those, those are not going to be a true loss option per se. I will probably take profits on those a lot sooner. One, the expiration sooner. Secondly, which means they expire worthless. And secondly, I really want to kind of try to capture this pullback. So if, as we have our major Tesla catalysts and Robotaxi becomes more active in more states and they ramp up the numbers of Robotaxis, there's going to start to become a negative impact on Uber and Lyft. And depending on how aggressive that rollout is, could hit Uber and Lyft extremely hard. And if those rollouts are extremely aggressive and in major cities, it could even be a plausibility that they start to eat into Lyft and Uber's revenue way sooner than anybody thinks. You know, it could literally be a couple quarters out before we start to see revenue decreases from Uber and Lyft because of Tesla. If Tesla is saying they can cover half the population by the end of this year, especially if they can cover it at scale and truly service those entire areas, half the population is essentially half of the U.S.'s revenue, or half of Uber and Lyft's U.S. revenue. And also, part of the reason why I'm playing both of them is because one of them might be impacted much harder. Why would one of them be impacted much harder? Maybe because it could be a few different things, and I'll call out some of those different things. Maybe because Uber has so much revenue that they know that Tesla's going to impact their revenue significantly. Okay, Uber has so much revenue that Tesla can easily impact their revenue. Does that make sense? Okay. On the flip side, you can have a company like Lyft that has so much less revenue be impacted because they're smaller and they can't afford to have as much of a loss. So that's where like the two instances of kind of the same thing, they both get impacted by revenue, but one of them could be impacted a lot worse. Impacted a lot worse means maybe Uber goes down 20% in value overnight, where Lyft only goes down 5% in value due to the same news, right? So the exact same news that comes out that impacts them both could impact one less than the other, right? And also there could be other things, and this is one of the bigger things I'm actually worried about, is acquisition, right? So if I have, like, let's say like Lyft, because they're the smaller company, let's say Lyft, I have my Lyft options, and for way out of the money that, you know, basically that Lyft's going to go way down in value, that if Lyft is to get bought up on the way down, then I'll never get near to my strike price. And if I don't sell before that happens, then my options will actually become useless pretty much at that point in time. So with Lyft, I'm actually more concerned about something like that happening than I am Uber, because Uber is just a bigger company, right? Now Tesla could come in and buy Uber like it's nothing, but I don't think Tesla feels like they need to buy Uber. They're like, why spend that money on Uber when we're just going to dominate them and take what they got anyway? Which I'm going to get to that. That's part of what I was saying. Elon's not talking about, none of the Tesla people are talking about how much they're going to disrupt them. They're just saying we don't need them. But I still think it's plausible that, you know, Tesla could find out that, oh, the demand is not there as we thought it was going to be. So we do need to buy Lyft. We do need to try to buy Uber. I think they would try to buy Lyft because it would give them a little bump, but the acquisition cost would be, you know, a tenth of what Lyft or of what Uber would be. And I mean, they could try to buy both of them. The government will probably step in and say something about a monopoly, that Tesla has a monopoly, and that they're not allowed to buy both companies. Maybe they'll allow them to buy one company. And it could be that, like, you know, Uber goes down so much in value, you know, if they go down 50% of value, 75% value, okay? I'm assuming if they drop that much in value, I will go ahead and sell my options at a gain, right? I probably won't let it drop that low. partially because of getting into things like I'm talking about with acquisition. But Tesla might wait until they drop 75%, then buy them, because why not buy them on a 75% discount? Why buy them when they're still up here, right? But if Tesla starts to mention anything about buying them, which is one of the reasons why Elon and them may not be, and any of the Tesla team, mentioning anything about this, but if there starts to be a hint that Tesla might buy Uber or Lyft, then that stock might stay elevated due to that potential protection. Oh, I'm worried that Uber's going to go out of business. I need to sell my stock. Well, you don't sell your stock because Tesla might buy Uber or Lyft, right? So Tesla would not want that security or confidence. It better they let Uber and just drop, and then out of nowhere they just buy them. Out of nowhere, boom. Same with Lyft. And that's the way these corporate executives have to think and have to operate. And those of you who don't know, I operate Elite Automation, which is our automation company. And we deal with corporate manufacturing people all the time, corporate engineers, directors, COOs, CEOs, that are involved in meetings with us because we are doing multi-million-dollar capital systems. And so these investments are pretty big investments for them. And we see like the way they navigate. We see the way that they spend their money and the way they put milestones in place and you know, they and like how like NDA protected certain things are. Like we have contracts with you know, some companies like Lucid that doesn't want, we can't hardly share anything. Like the max we can really share is that like we're a vendor of Lucid. That like nothing else we're allowed to say, or else like violates NDAs, and like, you know, technically they can't sue us necessarily, but they get to stop doing business with us. So my point being with all that is that the way that these CEOs have to operate, they have to operate in a completely different way. You can't have Elon saying that they might buy Tesla or Uber or Lyft, especially when they're at their most elevated heights, whenever they're hitting all new highs, right? That's not the time to be buying Uber or Lyft. That's not the time to talk about buying Uber or Lyft. The time to do that is whenever the stock has dropped, you know, 20%, 30%, 40%, 50% plus, you know. We need to see that major drop, and that's the time to buy. And also, I don't know if they can get past it without leaking it, due to they might need a shareholder vote to execute that acquisition. Now, if they can keep it under the rug and they don't have to have a shareholder vote to execute it, then maybe they don't have to present it to the public. But the point being is, you want to present it to the public at a locked-in price, because if you try to offer some locked-in price, and the public knows about it before you can offer it, then the stock price is going to elevate to at least that price. It could actually go down too if it's already higher than that. I guess it could go down to that purchase price, because if you own that stock below that purchase price, then you will get that upside hedge, and vice versa. If you're buying at a cheaper rate, then that same thing will happen. It can drop it down because nobody wants to hold the stock at a higher price than what you're offering to buy it at. So that's just one of those things where it has to be delicate, and also like the SEC or whatever regulates things like this and makes sure that there's not stock price fluctuation due to it. Yeah, so another thing why Tesla and Elon would not really discuss the demise that Uber and Lyft would have is, as a business person, you don't want to create extra competition. You don't want to create extra drama around statements like we're going to put them out of business, right? Because then somebody like an Uber could say, oh, this dude's like serious. They're like talking about literally putting us out of business. And Elon made a comment on something recently, like just literally a couple days ago, and somebody said this will be the biggest transfer of wealth. And Elon made a very diplomatic response to that. And he said, no, this will be the greatest generation of wealth, not transfer of wealth. So he's basically saying, no, this is not going to degrade things, right? This is not, I think he might have been talking about Optimus and not Robotaxi, but this is not going to degrade anything. This is only going to grow things like GDP increase and all that good stuff. However, no matter what, any growth has negative impact somewhere else, right? For example, like a company like mine, if a bunch of humanoid robots come out and they can completely do any job that a human can do, my business is going to get degraded. Why is my business going to get degraded? We build custom automation equipment. So unless you're super worried about like the throughput speed of something, like you just need it built faster, but then we're gonna have to, then you would come to somebody like us. But if you can have a business model of just throw more robots at it, and it's that straightforward, just throw more robots at it, that you can then repurpose for anything and everything, like you can a normal employee, repurpose it anywhere in the company, like you can a normal employee. Why get this custom automation piece of equipment that can only be used for this one thing, and then after we decide we're not doing this one thing, we have to get rid of it? So again, disrupted. However, we'll grow the GDP. Will make me financially wealthy because of my investments in Tesla and my hedges on like Robotaxi and stuff like that. There will be impact. Uber and Lyft are going to be hit so hard, now, like say for instance, will a company like mine, will like a company like Fanuc and Yaskawa, which are like robot manufacturers, like 6-axis robot manufacturers, will they be impacted as much? It'll take a lot longer. Like the humanoid robot's going to need to, it's going to need to catch up and become more useful. Let's just get off here, man. Is it getting off here? Okay. Can't lay on me right now. I might have to grab the boat. He thinks this is a big baby. But yeah. I think we're supposed to get off here, man. I gotta take this one. Yeah, we're supposed to get off here. Okay, I'll just let this thing do what it wants to do. Yeah, there's Tesla Service Center over there on the other side of the semi. There it is, right there, boom. In Louisville, Kentucky. Apply slide. Okay. But yeah, it's gonna disrupt things. Uber and Lyft, most of their revenue comes from autonomous. No, not even autonomous. Just regular taxi service, right? Ride sharing. 100% comes from ride sharing. They don't own really anything besides the app. What are their real assets, and I think Uber, they just came out with, something saying they're going to have like Tesla Semi programs, and I'll tell you what's going on with that, right? One, in good faith, quit climbing on me, dude. In good faith, the Uber CEOs wanted to say like, dude, like Elon, we're trying to work with you, give us something, let's do something to work together, because if they don't, they know what's going to happen. So like in good faith, either one thing, in good faith, they're saying, we're going to do this, right? With the Tesla Semi, to grow your semi sales growth, to get our people, or to grow our other revenue streams from things like semi, because, this other revenue stream is about to be disrupted significantly. So let's grow it through semi, and semi is more likely to be able to be owner-operated fleet versus a Tesla, because there's a lot of logistical things that go into operating a semi, like as far as like where to pick up a load, all these good stuff, right? Where to pick up a load, who to pick up the load from, like just getting the jobs, bidding the jobs, and they could create some software at some point in time to do that, but it's a lot of interconnection. It's a lot of work to set something like that up. Where's our bad boy at, dude? So, or the other thing, why Uber and Tesla and Elon, whatever, might be having some behind the scene conversations of like, look, I know what you're going to do. What can we do to protect our business? I know you're about to destroy our whole ride sharing thing. Okay, it's inevitable, right? Then this is the Uber CEO talking to Elon, okay? I don't recall his name at the moment. But what can we do here? I know what you're about to do. You're about to disrupt all kinds of things in our business. What can we do to work together? What can you do to help me help you kind of protect what we have going on? And Elon said, you know what? You can start a program where you buy all these people semis or whatever that'll help our semi growth, that'll show the confidence in our semi, get that thing launched, and because there's gonna be a lot of people that are like in fear of adoption of that platform. And so I'll tell you what, and then they start kind of like behind the scenes creating a roadmap of, you know, what they can do to kind of like start to pivot their business to be a different revenue model than the rideshare. And you know, again, these are types of conversations that CEOs have behind doors, especially something like that, like this, where it's that disruptive. And yeah, where it's that disruptive, and they got to figure something out, right? Or else just go out of business. So I'm actually gonna try to drive around a little bit just to try to find our whip, find our nene. What's going on, big baby? Where's she at? It might still be inside. I'm gonna just drive around the parking lot once though, see if it's out here. Oh, I like that rap. Two-tone. Oh, you're looking all over me, dude. There she is, baby. Look at this. Look at that. Look at this. Look at that. Look at that. Look at this. Ooh, I might record. Ooh, that car's not looking good there, buddy. Look at that guy. That guy's smashed. Oh no, that's not good. That's not my guy though. My guy's right there. Oh, right there she is. Look at that bad boy. Ooh. Look at that. I missed her. I got downgraded to this Model 3. I'm just kidding. But I would only buy the Model 3 if I was getting performance. If else, I would buy the Model Y, budget-wise. I want to get the Model X too, but I don't feel like having another $2,000 a month car payment. Especially for a guy that has never had car payments on vehicles, and now I have like car payments on multiple vehicles. My entire life I've bought cash. But yeah, there you go. That's kind of my thoughts on Uber and Lyft and its relation and its potential relation with stock price and whatnot. Make sure you subscribe and let me know down in the comments below if there's any other like things you'd like for me to dive in on regarding this topic. Because there's probably a lot of other things I didn't even think about mentioning in this video as far as like the relationship of what's about to happen. Again, we're going to roll out Robotaxi in all these different places. The stock market's going to react to that, especially once it impacts their revenue. But even prior to impacting their revenue, if Tesla releases enough Robotaxi vehicles, it's going to immediately impact the revenue, you know. But we need Tesla to definitively say we have 1,000 cars in this area. We have 1,000 cars in each one of these cities, or 250 cars in each one of these major cities, right? That way, without even knowing the revenue numbers of Uber and Lyft, we know the impact that's going to cause. Another thing, going back to impacts on why Lyft or Uber could be impacted more, is the data relative to how many Ubers versus Lyfts there are, right? Because there may be areas where Lyft is actually dominant. Nashville just got a deal with Waymo and Lyft got a deal in Nashville, right? And it might be because Lyft has more cars in that particular area. Lyft is doing better in Nashville than Uber is. Potentially. I don't know. Uber could just be smacking Lyft everywhere. But there's definitely going to be a ratio difference where, like, it might be 50-50 in one city. It might be, 90-10 in one city. So, like, if a city's being impacted and it's 90-10, it's probably going to impact the one that has the 90 more. You know what I mean? And especially if that 90 is Lyft, because Lyft being a smaller company, you're going to just disrupt all of its revenue for that entire city. But, yeah, say hi to Blue. Catch y'all in the next one. Hopefully this was valuable. You're drilling on me, dude. And subscribe again if it's valuable, and definitely put in the comments below. I want to know what you think or if there's any topics, not even just topics, but like any subcategories of like this Lyft thing that you'd like for me to dive into, or any of the topics that are already discussed that I can dive into, or just answer the questions quickly, I'll make other videos on those topics and or just answer your comments. Peace out. Time to get my Cybro back.